What's up, everyone? Welcome back to the trading world. Guys, it's been a while since I've gone on a rant, and I need to talk about something. I know I made a video about this in my short form content not too long ago, talking about you need to trust yourself and ignore everyone, but it's getting to the point where we need to make a long form video about this because the only true teacher that is going to teach you the true way how to trade is the charts themselves. It is the time you spend looking at raw price action and looking at how the market moves. If something makes sense to you and you observe it happening in price action, use it, trust it. Other people are going to say all kinds of things. But at the end of the day, what's the truth? The truth is what the market shows you. The truth is actually going into the charts and looking at it for yourself. So, T-Trade's comments about how macros don't exist, and if you don't know what macros are, they're basically key times where you can expect the market to move more aggressively than others, right? To go run highs or lows. Now, objectively speaking, from my own experience, they definitely exist. There's definitely higher probability times for the market to move. And, T-Trades, he's a great educator, great teacher. And that doesn't mean you need to listen to him on everything, right? Same with ICT. ICT is going to say things, and that doesn't necessarily mean that's all true. He could be saying something to try and gatekeep. He could be saying something to distract, right? It's a messy place, trading, and not everyone tells the full truth about everything. Sometimes, I don't know, or maybe not everyone even sees the market the same way. Some people, the way they view the market, macros might exist for them because the way they see price action. Maybe T-Trades doesn't even think about, because of the way he sees the market, he feels macros doesn't exist, but that doesn't mean that, what I'm trying to say is everyone views the market differently. And just because it never clicked for him doesn't mean they're not real, right? So you guys need to trust yourself. At the end of the day, no one's going to be pressing that buy or sell button for you. You need to get in the charts and do the dirty work and actually stare at the screen and observe price action. What is the market doing? Is the market respecting fair value gaps? Is it respecting new day opening gaps? It's like that thing with Dodgy I made in that video a while ago. Dodgy was making fun of me for talking about new day opening gaps. And it's like, Dodgy, bro, this is a great transition, by the way. New day opening gaps, they're real, influencing price all the time. Look at today. Perfect example, right? Look at the precision on this new day opening gap, guys. So here's the opening gap of the new day. It's this, by the way, if you want this indicator. It's by Lux Algo, ICT new day opening gap. Basically, it's the difference between the close and the open of a new day. And look at this. We have close, open. Here we go. Drag this out in time. Here you can see this is true support and resistance. This is not retail support and resistance. This is institutional support and resistance. These are where institutions will place their limit orders, right? So look, first, we hold it up, support, support. Then we backtest it as resistance, resistance. And it's like, I don't know if Dodgy just hasn't gone into the charts and observed new day opening gaps. I mean, I know he uses them a lot as a draw on liquidity, but it's like when he made fun of me that one time, a long time ago, it goes to show that people can be very experienced in the markets and still maybe not see the market in the same lens that you see it. And so you have to trust yourself. You have to say, what trades actually make sense to me? And no one else is going to be able to click that buy or sell button for you. At the end of the day, you need to conceptually understand why does your trade make sense and execute it with your own conviction. Because that is, at the end of the day, that's the only way you're going to be profitable in a world where 95% of everyone else is unprofitable. If you listen to other people tell you how you have to trade, you're going to be constantly in that 95% because you have to be able to trust yourself and your edge and your understanding, and understand that most people don't see the market the same way you do, and they might not understand it the way you see it, right? Anyway, that's enough for that rant today. Let's talk about price action today. It's actually really beautiful because speaking of this new day opening gap, right? Look at how the market pushes up into this new day opening gap, right? And this is right at market open, right? This is 9:30 a.m. Eastern. That's this candle right here. That's right when the market opens. And we aggressively expand to where? The draw on liquidity, which was, in other words, what highs or lows did the market want to go to? We had these lows that were algorithmic. Look at how perfect these lows are in a trend line, right? Anytime you see a trend line of lows or highs in the market like this, these are low resistance lows or low resistance highs. They're going to be cut through like a hot knife through butter. That's how ICT says it, right? It's just going to slice right through. So let's get rid of all this other stuff here. Look at this, right? We know the market's going to go back to this like a magnet. And it's not just going to go back to it. It's going to run right through it, right? These are where stop losses are placed. Underneath these generated lows. The market purposely leaves these to generate stop losses. So when the market comes back, right, it's going to have liquidity for smart money to take profit at, right? So look at these lows. Look at how perfectly generated they are. This was the draw on liquidity for the morning. Drag this over, and this is exactly where we go. So how could you have taken a trade within here? Well, dropping down to the lower time frame, right? New day opening gap was a nice confluence, but that's not how you would take the trade, at least not for me, right? Also look at the precision of this high here, right? This high was the exact high of the new day opening gap. Very, very cool. But the way I would take this trade is a simple liquidity sweep, break of structure, fair value gap entry, and not just any fair value gap, but this is the first presented fair value gap. So here's the liquidity sweep, right? And also note, this is a giant accumulation range here, right? Accumulation. So if you guys don't know, the market moves in accumulation, manipulation, and distribution. So accumulation, manipulation into the high of this new day opening gap, sweeping out the high at market open, which is very, very important, right? The market open is going to deliver price to where it wants to go. Same with news, right? So the market open, you want to basically like treat it as like the market. It's basically the market going where it wants to go, where it already wanted to go. Right here, it wanted to go down to these low resistance lows, right? So it manipulates this high, sweeps it out, and then we break structure. We break this low here, break of structure here, but also we break this low here. I'm just going to mark it out once, right? Either one of these are valid. Very nice displacement. This is very important for the 2022 model, guys. You got to see good displacement. If you don't have that displacement, I don't even consider it a break of structure, to be honest, because the whole point is that there's displacement. The displacement means that the market is algorithmically driving to whatever lows or highs it wants to go to. If you don't have that, if it's just like a weak break of structure, if it's not obvious, that's not a really valid trade for a break of structure. That's the same reason why if it wicks below a low or high, that's not a break of structure. It's got to have power to it. It's got to have force to it, right? So here you can see this new day opening gap here. Let's change the color to blue. Look at how perfectly the market respects that. Accumulation, manipulation into the top of the new day opening gap. And then what happens, right? We start to aggressively break down. We break this low with displacement, meaning we get a candle body close below this low here. So there's your break of structure. And then right here is our first presented fair value gap. I have a video coming out on this either later today if it's not already out. But it is the first fair value gap that forms after the market open. And it cannot include the 929 candle. This one includes the 930 candle, so this one's valid, right? So this is actually the first presented fair value gap right here. So here. This is a fair value gap. So it's not just any fair value gap, it's the first presented fair value gap. So one way you could take this is as the 2022 trade, where you just enter at the fair value gap and stop above the high. Stop above the fair value gap. You could also put stop above the high, but in my opinion, with such good displacement, I really don't see a reason for, like, if we came above this fair value gap, that kind of defeats the point of displacement in the first place. So I would prefer to just see us not go above, like this. I'd rather just have my stop loss here, because the whole point of the displacement is that we should continue to displace towards whatever our draw on liquidity is, which is these low resistance lows here. So that's where I would put stop loss, and then low resistance lows right here. And you can see we drive down to those low resistance lows. But also, guys, not only is this a 2022 model where you sweep out the high, break the low, retest the fair value gap, but this is also a flow state model, right? So getting rid of all this, actually, we can keep this. We're just gonna get rid of this and this. On the 1 hour, what is this? 1 hour. This is a 1 hour fair value gap here. Do you see that? The gap between this wick and this wick is a fair value gap. Here to here. Zooming in. You see that? Wick on one side, wick on the other side. The body, the area on the body in between, that's a 1 hour fair value gap. So now we jump down to the 5 minute, which is the aligned time frame. Right, we want to find our change in state of delivery. If it's a 1 hour gap, we want to find our change in state of delivery on the 5 minute. And so any of these work, but I personally would use this one. Just you could also use this one, but this one is the most realistic one to me. And yeah. 5 minute change state of delivery. And the coolest part about this, guys, is not only was this these low resistance lows a draw, but if I measure this out, right? If I measure this out from the change state of delivery body to the high, 1, 2, 3, 4, boom, perfection, right? Right down to that fourth standard deviation, hit perfectly. So there's our max extension, and very, very cool, right? We aggressively drive down. You can kind of see this whole thing as accumulation, right? Accumulation, manipulation into this new day opening gap, the high of it, and the high of the 1 hour gap. So we align our 1 hour gap with a 5 minute change of state of delivery. Personally, I would enter on the retest, not the close here, because it looks like we're probably going to retest it, right? That's just what it looks like to me. So I would have waited for a retest. And honestly, with such good displacement, you wouldn't necessarily need to have the stop at the high, but a lot of time, most of the time you usually do want to have stop at the high, but maybe you put it like there, and then, or even here, like anywhere in there is fine. And enter on the retest of that 5 minute change of state of delivery, and then we drive down to that fourth standard deviation. Now I would have targeted these low resistance lows here, and that would be a nice 3-2-1 trade. So that is how I take this. Now obviously I always scale, I always trail my stop. I would have figured that out somewhere in here, right? I probably do like TP1, TP2, trailing the whole way down, and then once again, our draw on liquidity was these low resistance lows off to the left side of the chart. You can see the market did aggressively drive down to those. So very, very nice trade. Here's the lower time frame version of this, right? 5 minute change of state of delivery. And then, yeah. Oh, the other thing that was really cool about this is check out our time levels, right? We have midnight and 8:30, right? Where does the manipulation occur? We want to look for our manipulation to occur above midnight and above 8:30, or if we're going long, we want the manipulation to go below midnight and below 8:30. So look at this. Midnight here, 8:30 right here. And look where the manipulation occurs, right? The manipulation sweeps both midnight and 8:30. So that is another confluence that was the actual true manipulation. So you can see how all these confluences start to add up, right? Sweep of the high into the new day opening gap. Manipulation above 8:30, above midnight. Those are key times. Not only is this any high, this is actually London's high, right? If I pull up our session highs and lows, you can see we actually swept out the high of London. That's a ginormous liquidity pool. That's where a lot of stop losses are going to be. So you see how the market is perfectly algorithmic, right? Running those stop losses, change state of delivery, 1 hour gap, 5 minute change state of delivery, retest of that change state of delivery, down to those low resistance lows, and down to the fourth standard deviation on the dot. This would be a 5-to-1 trade if you had held it all the way down to there. Now, personally, I'd go all off at 3-to-1 at those low resistance lows. Actually, I would consider leaving my last one definitely to trail, right? I would trail it to that fourth. So, for instance, as I'm about to take profit here, I just put in a trailing stop, and I'd consider holding it down. But, yeah, for the most part, genuinely, I just scale out as we move lower. You can go watch my trade from, I think it was last Thursday or the Thursday before that, but I took a trade very similar to this and was one of my best. Actually, I think it was my best trade ever, so very, very cool. But this is how I would take this trade. Lots of confluences. 8:30, we went above 8:30, we went above midnight, and then the only other trade that once we get here, right, once we finish our expansion, everything else becomes a lot lower probability. I don't like to mess around with it personally, but if I was to mess around with it, right, which I wouldn't necessarily, but because right after we get expansion, that's when the market will consolidate, right? The market goes through phases. It needs to expand and then let more stop losses build up, right? So right now, right after the expansion, we're probably not going to get that much movement, right? We just kind of chop around. But yeah, if I had to take something in here, that was in the late morning, right? The only thing that I did see was, I didn't see this in the moment, unfortunately, but in my analysis after the day was over, I did notice this. We had a 5 minute fair value gap, and then we sweep out the low with S&T. So there's a liquidity sweep. We get S&T here. And then 30-second change of state of delivery here. So I would enter on the close. And when I enter on the close, when I do retest, usually I have stop loss at the low, but when I enter on a close, I'll do more aggressive stop loss, because the whole point of entering on a close is I'm not anticipating a retest, right? So I go a little bit more aggressive, and then measuring out standard deviations here. And you can measure this out a few different ways, but yeah, fourth standard deviation hit, right? This would be a 3-to-1, 30-second change of state of delivery, 5 minute gap. So 5 minute gap aligns with the 30-second. And we got low resistance highs all through here. So 5 minute gap, 30-second change of state of delivery. We also inverse this, right? So double trade. And yeah, that was the only other thing I noticed in the afternoon. Late morning. To be honest, everything here just seems a lot like chop to me. Maybe there might have been a trade later in the PM. I honestly didn't look that much. But if you guys did take anything else, definitely let me know in the Discord. And yeah, I think that about covers it for today. Yeah. Anyway, right up to that fourth standard deviation. You guys see how nice this can be to measure out standard deviations, right? A lot of time we'll go the second and then the fourth, and also the first. But Anyway, that about covers it for today's video. Hopefully you guys enjoyed, and let me know how I can keep making these better. I will see you guys in the next one. Peace out.